Welcome to the channel, guys. My name is Jess. So Bitcoin has recently seen a really large rejection from our range high retest at $72,000. And after last night's FOMC meeting, the price has now moved down to retest a really massive and critical level of support. When should we start to worry about the recent price action, and how do we know that Bitcoin is due for another leg downwards? Let's dive into all of that and more in today's video. Before we get into all that though, make sure you guys like and subscribe to the channel down below to get regular Bitcoin analysis every Monday, Wednesday, and Saturday, and ring the notification button so you never miss an episode. If you're after even more content, be sure to check out my free Telegram channel for daily updates as well as crypto and economic news. And if you're interested in a VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups with exact entry points, targets, and stop losses. Alrighty guys, so diving right into the charts here, we're on a 4-hour time frame. Let's go ahead and talk about what on earth has happened in the last couple of days. So moving towards the end of the month, things were actually looking quite good. We had that range high retest that we were expecting in that last video at $70,000, but unfortunately we had a rejection there. So the price wasn't able to sustain and actually moving into economic news data. Economic news events, people tend to de-risk, and we don't necessarily see any sort of aggressive accumulation because that would just be overconfidence, really. So moving into the interest rate decision, we had a little bit of downwards price action, but we were, for the most part, holding this key level of support here at $65,000 until last night. So at 4 a.m., we had the FOMC meeting, and that is when we broke down from this change of character level at 65K, and has moved then since to this level over here. So we've moved to fill this next volume gap, ending at 64,700. The FOMC meeting last night really wasn't all that bearish. We just generally tend to see a correction because of the meeting that happens afterwards. So interest rates are still the same. The rates cuts have still been paused. And we're still potentially going to see rate cuts later on this year. I think the major consensus is sometime in September, but we do generally tend to see that correction, especially when that meeting happens, purely because of how coy that the Federal Reserve Chairman generally is. Over here we can see he's saying a rate cut could be on the table at the September meeting, right? Nothing is ever guaranteed, nothing is ever certain with these meetings, and they're generally quite reserved in what they say, and it always tends to lead to some sort of correction. So a little bit of background on the interest rates. Moving into this year, 2024, we were expecting 3 rate cuts throughout the year, and we're in August now, and none of those have happened. So the consensus has slowly dropped down to just 1 rate cut at some point this year, with a lot of people expecting it in September. So inflation has been moving in the right direction, right? It's moved from, I think it was like 9% from when we started increasing those rates, to now I think it was 3% from last month's annual inflation. So we are moving towards that 2% goal that the Federal Reserve has kind of like set that target on for those rate cuts. But again, we're just not seeing that just yet. And as you expected, everything dropped just a little bit. So S&P 500 dropped a little bit as well, but it did recover quite quickly in comparison to Bitcoin. Bitcoin is still, for the most part, going down. So let's dive into our macro analysis now. Let's go ahead and talk about this rejection here at $70,000 and what it means in terms of the macro scale and this next little segment over here as we approach our key support at $63,000 to $64,000. Before we dive into the analysis though, guys, let's hear a quick word from our sponsor Bitunix, where you can get 15% off all of your trading fees and $5,500 in sign-up rewards when you create your account using the link in my bio down below. Bitunix is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. Alrighty guys, so moving over onto the daily chart here, we can see that overall, Bitcoin really isn't looking all that great, guys. It's not looking terrible just yet. I'm not giving you a warning that we're going to see a massive correction right now, but we really are on a little bit of that teetering edge right now. So I'll go ahead and talk about what I mean. So right now, obviously, you guys know we're traveling in that little range here, and essentially the two large narratives in terms of the macro scale, or the macro movements, are whether or not we're going to see a range high retest and break out, or a range low retest, right? A further correction all the way down to what would kind of coincide with $55,000 to $56,000, right? It would be a quite large drop from where we are right now. Naturally, that is our bearish case scenario. So when we talked about the probabilities of these two levels being seen and a breakout of this, $70,000 to $72,000 level of resistance, we spoke about the 50-day moving average, first of all, being a really great indicator for the probability of seeing a range high retest, right? So we can see from this little illustration, every time we're above that 50-day moving average, we generally see a range high retest. We moved back above the 50-day moving average here in the middle of July, and a couple of weeks later, we saw that move up to $70,000, right? Falling below that midline and falling below that 50-day moving average, we had our range low retests, right? So currently right now, we are retesting that 50-day moving average. So if we do not bounce here and we see that little bit more of a leg downwards, it puts us at real risk of seeing that move down to $55,000, right? Obviously, there are more horizontal validations and more structural validations. We've got the bull market uptrend right here as well, but it increases that likelihood, as I said. Another thing that we can see as well, looking at this daily chart, is that we're getting very close to this next key level of support over here at $63,000 to $64,000. And I've spoken about the significance of this a couple of times, but essentially in a similar way to the market cipher A, or that 50-day moving average, it marks the midline of this massive channel that we've had here. Specifically in this little last segment, the last couple of months, 2 to 3 months of price action, moving above that $63,000, we generally see that range high retest. Falling below 63, we had that range low retest. Again, moving above 63, we had another range high retest. It really is quite a significant level, guys, on the charts. It does represent that midline, and above the midline, we're more than halfway. So it's much higher probability that we see that continuous move upwards through those levels of resistance, rather than a much larger breakdown through all that extra volume that we'd have here above that halfway point. If we go over onto the Ichimoku cloud on the 3-day time frame as well, we can see that significance of that 63K level here. We know that 63K represents 63 to 64 represents the top of that cloud, and 62.7 is that baseline level of support on the 3-day chart, which, as you guys know, falling below, we generally start to see a much higher probability of a move down to retest that leading span A, or the base of the Ichimoku cloud, right here, that red line at around 56 to 55,000. So again, just as the Ichimoku cloud suggests and our structural chart suggests, moving below these levels here becomes quite likely that we go and see that range low retest. Now, the reason why that is so bearish in comparison to these prior range low retests over here, like we've had a couple already, why is this one so important? Well, the reason why is because this particular round that we've had for this range high retest at $70,000 has been probably the most bullish one that we've had so far, right? If we pull up the RSI, we spoke about this break over here that we've had in the massive 4 to 5 month long downtrend that we've had in the RSI. Right, we had a similar break on the weekly chart. We had a weekly candle close with the RSI finally above that similar, downtrend, showing that we had a macro shift in momentum, a macro bullish shift in momentum. We were seeing more buying pressure and more strength that we had seen for the last 4 to 5 months. So on this range high retest, if we had, if we do end up falling all the way down to this range low, despite seeing all of that strength, guys, like that would be such a bad sign, right? It would show us that, despite all of that, it was still not enough, right? So it is really, really bearish if we do see that. And it does suggest that, Bitcoin is very unlikely to then recover once again and go in for another rally and then finally break out again. Like, those chances and that strength really does drop the longer that we continue to see this, particularly after that massive surge that we've just had in the last couple of weeks. So that puts into perspective a little bit the significance of this next little segment of price action. But before we get all gloom and doomy, support is support until it's not. So we are still holding 63 to 64K support. We are still above the 50-day moving average. If you guys have been watching the candlestick while I've been talking, it has been flashing between green and red. We can see a little bit of indecision there. The buyers are trying to step in and take control here of the market and push the price back upwards. We are just, it obviously just is a waiting game right now, and whether or not we're going to see that strength and push back upwards. If we move over onto the shorter time frame charts, guys, we're on a 4-hour time frame here, we can see a little bit more evidence that the bulls are still very much in control as of right now of both the short time frame and the higher time frame charts. So over here we can see that key uptrend on the short time frame that we have here that has really represented the increase in strength that we've had approaching and going above this key support level at 63 to 64k, right? That macro bullish support level. Okay, and so while we're above the trend line, we should obviously be going up. Naturally, trend lines don't exist forever. They will break at some point. So at some point, that assumption is going to be wrong. But until we see that breakdown of the trend line, as well as the breakdown of that prior low level to represent a lower low on the charts, right? That downwards trajectory. Sorry, that's such an ugly arrow. That downwards trajectory, we should be under the assumption that we should be seeing a bounce here and a leg back upwards. If we take a look at the RSI as well, we can see that over the last 2-week period from that start of the uptrend over here, we have been seeing increased selling pressure, right? The exact same points that allow us to map out our uptrend have the exact same correlations over here down on the RSI. So we can see that throughout the last 2 weeks, despite the increase in selling pressure, the price has still been pushing upwards. So what we're seeing here is actually a sign of strength, and it is bullish absorption. So the buyers are stepping in and pushing the price back upwards and absorbing that selling pressure. So that is a good sign, guys. It is a sign of strength. But what the ideal bullish case scenario would look like here and would allow us to really gain a little bit more confidence is a strong bounce here from this level of support, right? Potentially a retest of this level of support at 63 to 64, a little wick there to, I guess, liquidate some of those later shorts, I guess, or what is it, later shorts? Yeah, later shorts, and then a bounce back upwards, right? And what that would mean is that if we do that within that day, within this next 24-hour period before this daily candle closes, what that would mean is, first of all, that we bounce on the 50-day moving average, but also that we push RSI back above this downtrend over here, which is really important, guys, because we want to see that this massive shift in momentum has been able to be sustained, especially after that retest of $70,000 over here. If we're able to do that, and we're able to see that amount of strength step back in despite that recent rejection, it tells us that on the higher time frame, we then, sustain that high probability of seeing another range high retest and holding that high potential for a breakout at that next retest. If we fall back below here, right, it doesn't really tell us, it's not really a big sign of confidence, is it? Right? If we fall back below, and even if we approach that trend line, all that would be bearish divergence then, and then we will very, very likely have that rejection. Okay, so we want to be sustaining this sign of strength that we've seen so far and getting that daily candle back above that downtrend here on the RSI. So in that bullish move, that first level that we have, our first level of resistance is here, $65,000. We can see this, on the liquidity swings indicator, we can see that little level and its significance. We can see how many times it's acted as a base of support. And so moving back above there would be that first little leg upwards that we're looking for to first establish the 65k as a base of support, and then moving up so on forth. We can see those relevant levels there. Moving above that, we have 67k. It was a really, really strong level of resistance there for a while. And then above there, we've got 68, right? Again, you can map that out on the liquidity swings indicator. And then we have that range high, which sits at $69,000 to $70,000. It's moved down a little bit because the trend line is a downtrend, so obviously it's going to be at a little bit lower of a number. But so that is the bullish case scenario. It's not looking great right now, guys. We can see that wick downwards, but as I said, we might see a bit of a retest here. As long as we hold that level of horizontal support and we do not break below the prior low here, using a candle close, like if we get a 4-hour candle close below this prior low at 63.4, that is confirmation that we are very likely to then go downwards. So let's go ahead and talk about that bearish case scenario on the short time frame. So in the scenario that we do end up seeing Bitcoin fall below this trend line and that prior low here at 63.4, what that first target is going to be in terms of that next leg downwards is going to be that sell side liquidity level for this level of support at 63. Over here, it's $62,300. Now we can see that it's a sell side liquidity level just a little bit on the higher time frame. So if we go over into the 6 hour, we can see that trigger just there. And if we take a look at the prior price action and pull up the VRPV as well, we know that just below this little leg at $62,300, we have a gap in the volume profile. So that means that falling below this level over here, so on a 6 hour or 12 hour time frame, if we get that candle close below 62.3, we are very likely to then see a much further move down to $60,000, which is, as you guys know, that next key macro level of high time frame support. 60K is also what coincides with our bull market uptrend as well. So it is a really strong level of support. It's also, you know, that psychological level, pi cycle high, you guys know already. And it was the base of our level of consolidation for, you know, quite a long period of time, right? Prior to forming what ended up becoming a descending channel formation. Okay, so it is a really strong level of support there, but that would be that bearish case scenario. So first leg downwards, 62.3, candle close below there, $60,000. Now falling below $60,000 again confirms to us that we're getting that high time frame macro bearish scenario, because we've lost those key levels that we spoke about at the start of the video, right? We've lost our structural support at the bull market uptrend. We've lost a key horizontal psychological level of support as well at 60K. Tells us, okay, we are very likely then to see that continued bearish case scenario down to move towards our range low at 55,000. And I'll talk about that more in detail as we approach that level of support. There's really no point going into all that detail right now when we don't even know that we're going to see it. So if we do see that, I'll see you guys in that next video and we'll talk about that then. Alrighty guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to like and subscribe to the channel down below. And if you're after even more content, be sure to check out my free Telegram channel for daily updates as well as crypto and economic news. If you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups with exact entry points, targets, and stop losses. And if you are a trader, don't forget to sign up down below to Bitunix to get 15% off all of your trading fees and $5,500 US in sign-up rewards. Hope you guys have a really great week and I'll see you next time. Bye.